Let's dive deeper into the action and get the excitement that happened below the indexes. Abigail, what are you watching at the close?
Well, you know, it's interesting that you talk about excitement because stocks may be barely moving, but as Joe was talking about earlier, bonds are moving in a big way. In fact, we have the best rally for the 10-year yield or the 10-year Treasury note going back to early October. So while stocks are just sort of drifting to these new record highs on a lack of news and a less than bad than feared earnings season, we have a big rally for bonds. Now, we put this into the context of a chart, a great chart that comes to us from Paul Sienna of Bank of America Merrill Lynch, who had a tremendous call on bonds all year, a big bond bull. But he said that if it goes above this trend line in yellow, the downtrend marking that bullishness for bonds, it would mean that you'd continue to see bonds sell off. Well, you can see on the recent pullback for bond yields, Mike, you can see it's right on that line. It's going to be interesting to see which way the bonds go. But right now, this chart may still point to a move higher for yields, although just a little bit more consolidation right in the near term, Mike.
Thanks, Abigail. Well, who says there's no yield left to be found anymore? Check out the Alarian MLP Exchange Traded Fund. Now, this is an ETF that tracks master limited partnerships in the energy infrastructure space. As you can see in that chart, it's really gotten hammered since its high in July, but that has caused its yield to jump above 10% today for the first time in 2019. Now, that's a risky yield. Obviously, this is an ETF that has reduced its payouts pretty consistently over recent years, reduced them by an annualized rate of about 4.5% over the past year and almost 9% over the past 3 years. Still, that double-digit yield proved to be a good entry point the last few times it was hit in 2018 and when it came close in 2017. Of course, the caveat was in 2016 when oil prices dipped into the 20s. You can see there that indicated dividend yield was above 20%. And Taylor, so obviously whether this 10% yield is too good to be true or not depends on what happens with oil. If you believe oil is range bound or headed higher, then that is a pretty juicy looking yield. If oil's due for another swoon, of course, it would not be too surprising to see those payouts get cut further in the MLP space. Taylor.
Well, Mike, I wanted to take a look and touch on something that Luke was talking about at the beginning of the hour, where the consumer still is relatively strong despite some of the weak retail data that we got today. One measure of that is going to be the refinancing applications that we'll get tomorrow, and that's according to the Bankers Association, the Mortgage Bankers Association. If you come and take a look at a chart that I'm showing here in my terminal, in blue, I'm doing an inverse of yield. So the rising blue line is actually falling yield, and it's been very, very steady there pretty much in the second half of this year at 3.7%. And that means that these refinance applications in white should continue to be very, very strong. And it should give as well some U.S. shoppers more cash heading into this holiday season. So again, with lower rates continuing, it should bode well for refinancing applications and perhaps more cash for the consumer as we head into that holiday season.